Hi, this is Megan Coe from the King County Auditor's Office. Today I'm going to present to you our audit of the Recorder's Office with a focus on financial controls. This audit has two main takeaways. First, that financial issues affected multiple areas at the Recorder's Office, and today I'm going to talk about 3 of the 7 issues we identified in our report. Those 3 are prepaid accounts, invoices, and bad checks. Our second and final key takeaway for this presentation is that we found limited oversight, reduced accountability for preventing, detecting, and correcting the issues we identified. So let's get started with prepaid accounts. Prepaid accounts are those where customers open accounts by sending the Recorder's Office a lump sum, and then as the customer does things like record documents or pay real estate excise tax, their transactions lower their account balance. When their account balance gets low, it's up to the customer to add funds so they can continue doing business with the county. Another way of saying this is that because payments and transactions don't always happen at the same time, prepaid accounts rely on good record keeping. It's also important to note that in 2023, prepaid accounts made up 68% of Recorder's Office transactions and 98% of dollars received. This large amount of dollars is largely because prepaid accounts are used to pay real estate excise taxes on large real estate transactions. The Recorder's Office collects real estate excise tax in addition to recording documents within King County. The Recorder's Office sets 0 as the minimum balance for some customers with prepaid accounts, and it allows negative balances for others. For example, take a look at these 3 real customers. These are private businesses for whom the Recorder's Office allows minimum balances of -$90 million, -$50 million, and -$25 million. The Recorder's Office says this is necessary to ensure those high-dollar real estate transactions are processed timely. However, we found that the minimum balances set by the Recorder's Office are between 2 and 23 times larger than each customer's maximum daily transaction volume over a 6-year period from 2018 to 2023. What that means is that even if the customer started with no money in their accounts, during a business day, they would be unlikely to need as much credit as the Recorder's Office grants them. Because these 3 customers have such high transaction volumes, we did a review of deposits for these customers between 2018 and 2023. Over the 6-year period, we found errors that misallocated nearly $7 million between these 3 accounts. By not keeping accurate records, the Recorder's Office increased the risk of uncollected revenue, customer disputes, and providing credit to private parties. In general, we found a lack of internal controls led to issues with prepaid accounts. For example, a single employee entered deposits without a process for secondary review. The Recorder's Office did not have a clear process for addressing errors, and staff relied on customer-reported data using customer statements instead of bank statements to add deposits to these 3 customers' accounts. These gaps increase the risk of uncollected revenue, customer disputes, and providing credit to private parties. Not preventing and detecting debt to the county is a problem because the state constitution prohibits the gift of public funds. It specifically bars local governments from providing credit to private parties and provides no minimum allowable amount of credit, meaning any amount could constitute a violation. To increase reliability of financial data and reduce legal and reputational risk, we recommend that the Recorder's Office regularly review prepaid account deposits against bank statements and county data, establish a process for correcting errors, and sign agreements with major customers to ensure timely payment. Now that we've talked about prepaid accounts, we're going to move on to invoice errors. Monthly invoices bring in about $1 million in annual revenue to the recorder's office, mostly from governmental entities. We found that the recorder's office did not detect invoice errors that included both duplicate transactions, which can result in overbilling, and some missing transactions, which result in underbilling. I'm going to start by talking about the duplicates. Duplicate transactions appeared on multiple invoices between 2018 and 2023. In the last 2 years, the recorder's office overbilled customers by more than $300,000 per year. As you can see on this graph, that was much more than in previous years. And in sum, this caused overbilling from duplicate transactions to exceed $1 million over 6 years. So what caused duplicate transactions? It's our understanding that it was likely an IT error, a problem with the interface between the recorder's office receipting system and the county's financial reporting system. However, the recorder's office did not have a process in place to check invoices for accuracy before mailing, allowing these incorrect invoices to go out to customers. As a result, the recorder's office either collected more money from customers than they actually owed, or inaccurately inflated the county's accounts receivable. In addition, these errors resulted in inquiries from customers who reached out to understand the difference between their own internal records and the county's bills. So now we're going to move on to that second type of invoice error I mentioned, invoice omissions. We found $17,000 in unbilled transactions for invoice customers. Obviously, this number is much smaller than the dollar value of the invoice duplicates, but it's still interesting to look at this figure. And I want to point out as well that in the last 2 years, there was again an increase in these omissions as compared to in earlier years. I also want to note that these errors are actually relatively easy to fix, and in response to our audit findings, the recorder's office fixed most of the 2023 transactions in less than a week, as represented by these hash lines on the bar for 2023. Unlike duplicates, missing transactions resulted from data entry errors. These transactions did not go to the county's finance system as planned because staff failed to enter required information such as names or addresses into the records. The recorder's office has a report that can create an error list in the event that this happens. However, it did not have a process to run the report regularly and revise transaction data accordingly. The missing transactions resulted in uncollected revenue and again, customer inquiries regarding billing. To ensure accurate, complete, and timely revenue collection, we recommend that the recorder's office review invoices for old transaction dates before mailing and use existing tools to catch data entry errors before exporting data to the county finance system. So we're now at the third and final of the 3 issues that we wanted to talk about for our first key takeaway, and that's bad checks. So bad checks are essentially checks returned by the bank for a lack of sufficient funds. And we looked at those checks that were written for $1,000 or more. Based on this subset of the checks, we calculated an estimated $91,000 in uncollected revenue due to return checks. Now, the recorder's office did send notices to people that their checks were returned and did have some success by sending out these notices, especially in the last 2 years. However, if the recorder's office did not hear back from customers, it did not take any further action. Moreover, it's interesting to note that people who are writing checks for more than $1,000 were mostly businesses, and some of them actually sent in more than one bad check. Since it's up to county agencies to determine their collections procedures, we recommend that the recorder's office establish a process for when and how to send unpaid accounts to collections that takes into account the value and frequency of bad checks written on these unpaid accounts. So our second and final takeaway is that the errors we discussed persisted due to limited financial oversight. And this oversight was caused by unclear roles and responsibilities, turnover of fiscal staff, and outdated procedures. For context, the Recorder's Office is a section within the Records and Licensing Services, or RALS division of the Department of Executive Services, shown here as DES. The finance manager and senior accountant sit within the RALS division, and they focus on budget monitoring. Meanwhile, Recorder's Office staff focus on customer service. That means that the roles for oversight and financial controls were not well defined, increasing the risk of miscommunication and the lack of action. Staff turnover also affected oversight. This is because the Recorder's Office delegates most internal controls to one fiscal role. This role has been vacant for several times over the last 5 years, as shown on this chart by those months highlighted in orange. The finance positions at RALS also turned over as recently as 2022. Lastly, the Recorder's Office has outdated cash handling procedures, reducing transparency. Every agency is responsible to establish their own procedures to support internal controls and the work of fiscal staff. The procedures currently in effect at the Recorder's Office date back to 2016. This is before major operational changes, such as the implementation of the current recording system. To increase fiscal oversight, we recommend that RALS clarify roles and responsibilities for internal controls, work with the Recorder's Office to create a contingency plan to reduce the impact of turnover in fiscal staff, and update its cash handling procedures. To sum up this presentation, we found gaps in financial controls in multiple areas at the Recorder's Office. Today, we discussed 3 of the 7 issues outlined in our report, as well as how limited oversight reduced accountability, allowing these errors to persist. Both customers and the county's reputation faced negative impacts, and more needs to be done to build strong internal controls, which are the foundation of best-run government. That concludes our presentation. Please find more at our report, also available on this website. Thank you.